All right, we're here. We are officially live. Got the audience in the back clapping. Hello, everyone. Welcome to the close of the market. Let me just tweet this out. Put it into the world. Let everybody know that we are here and that it is time. The title of this one is an interesting one. And I'm going to explain it in a second. Live market close. Here we go. There's absolutely a lot to talk about. Lots of stuff that's going on. And we have a bloody red day. That is, I mean, it's not as horrible as it was a couple hours ago, but still red nonetheless. It's only me and you, buddy. No one else. Jackalope, hello. Jason, hello. Miami Ren, hello. All right, so the title of this market close was that the stock market is red, but not the Starburst type of red. Okay, let me know if the mic is better right now. The mic should be good. And the reason that I made that title is because everyone knows that Starbursts, the red ones, are really good. Like, they're the best ones inside of the pack. So we treasure the red ones. The problem is this market is not the red Starburst. It's the bloody Starburst, which isn't the right type of Starburst. That was a long-winded way of explaining that it sucks. I guess that's what I was trying to say. I don't know. I thought of it on the spot, and I was like, "Oh, Starburst. That makes sense." I haven't had Starburst in a long time, by the way. All right, let's get into the market. Let's open up Webull. Let's see what we've got going on. Obviously, we're red now. We were earlier red in the morning when I was in the market open. A little bit worse than we are right now. We're trending up a little bit more. S&P is up 0.04%, so nothing's really changed from the morning, but it's at 357.90. Tesla at 216. It was about 213 pre-market and during the market. Meta hit new all-time lows, 126, now at 128. Meta is a very interesting one. They just released a $1,500 AR VR headset. Who's going to pay for this? I don't know. I mean, I think that employers of corporations may pay for this for their entire staff rather than individual people. I think that's what Meta might be betting on, but it's hard to imagine individual people shelling out $1,500 just for this thing. I mean, yeah, some people will buy it. I don't know if a lot of people will buy it. NASDAQ 10,450. So NASDAQ's recovering a little bit from 10,351 that it was in the opening of the market, 930. And AMD is still stuck at 58. AMD might be a really good bargain. AMD might not be a really good bargain. We have to do some analysis on that one. But if the world needs more chips in the next 5 years and computing power, obviously AMD is something for the long term that you would like. I guess the question is, what is the core valuation? We are so lucky to have them at. Felicia, I appreciate you. Happy you have joined. I am trying to just make sense, just like everyone is trying to make sense of what's going on. SoFi at 509, it was stuck at 490. Enphase finally down 3%, 247. It was stuck at 255. I have not purchased more SoFi. I don't trust it yet. It looks like it's hovering really badly in the $4 range. So, or that it's stuck in that 490 range. So we'll see as that plays itself out. Scott, what's up? What's up? Thank you for being here. Are you over under 8% CPI tomorrow? I am over. I think we'll be at like 8.1. So we went down from 8.3, so probably 8.1. Best case scenario, we're at 8. Or sorry, normal case scenario, we're at 8. Best case, we're at 7.9. But 8.1, given the PPI today that came out that showed an actual increase year over year, probably the best. Or probably what I think might be the best. Haven't looked at the market all day, hoping you can fill me in. Well, it's red, so there's no really reason to look at it. It's just bad. Bandana prints are hot in the New York, New Jersey area lately for some reason. You guys like the shirt? The shirt is, come on, bro. The shirt is like, I got this shirt in 2015, and it still fits. I think it's a legit shirt. I think it's not a bad shirt. CPI is going to 0. Man, I wish. I freaking wish. CPI 0%. That would be great. CPI is at 0. That'd be phenomenal. All right, let's go into CNBC. We have the market close in about 11 minutes. We're going to see what they're talking about. Obviously, everyone's freaking out that the market kind of sucks, as always. But we're going to see. Oh, yeah, I forgot the Fed minutes. Okay, so the Fed released their minutes, and they said they have no intentions to stop slowing down rates, but they are going to take into account the adverse effects of potentially tightening too much in a world in which they don't need to do that. So that was like the bullish part, the dovish part of what they said, but the core like hawkish stance, which isn't that hawkish because we've known they've been feeling this way, is that they expect rates to stay the way they are. You're wishing for borderline deflation. LOL, think again. Yeah, I think it's hyperbole. 2% would be nice. Obviously not 0%, but less than 8% would be amazing.
The Federal Reserve September meeting showing that many participants stressed the need for the Fed to keep tightening, quote, even as the labor market slowed. They said ongoing rate increases were appropriate, and the cost of taking too little action outweighed the cost of doing too much when it came to fighting inflation. Once a restrictive level on the federal funds rate was reached, there was general agreement that it was appropriate to maintain that level for some time. A sizable portion of the economy, Fed officials observed, had yet to show response to tightening, even while some of the interest rate sensitive sectors had showed quite a bit of weakening. Inflation was said to be unacceptably high, the labor market very tight, and inflation was declining more slowly than had been anticipated. Maybe a few nods to the dovish side, but just very subtle nods. Several said the Fed needed to calibrate the pace of tightening with the risk of an adverse effect on the economy, and it would be appropriate at some point to slow the pace of increases, though not necessarily telling us what that level would be, where the Federal Reserve would stop. A few others here. Inflation pressures were seen gradually receding in coming years, and there's uncertainty was high in the economy or in the economic outlook, but there were risks to the upside when it came to inflation. They said a wage price spiral had yet to develop, but it was seen as a possible risk, and risks to growth were generally to the downside, mostly from global headwinds like a European recession, a slowdown in China, as well as the Russia-Ukraine war. One other note here, the Fed staff did say liquidity conditions in the Treasury and mortgage markets, quote, remained low. You know, we've been talking a lot about that liquidity story here. So pretty much a hawkish Fed reflecting the statement, reflecting the press conference of the Fed chair, with just maybe some additional concerns and commitment to keep rates high even as the labor market slowed. Tyler?
All right, Steve, stick around and let's bring in Aditya Bave, Bank of America's senior economist, along with Rick Santelli, watching the bond market. I'll begin with you, Aditya. As you hear this report from Steve about the minutes, is there anything in there that surprised you?
Guys, I'm going to keep the video going for a second. What up, Aha? Thank you for being here. Angel, thank you for being here. But I just got a notification from Bloomberg. Alex Jones must pay $1 billion in damages for calling the Sandy Hook Elementary School massacre a hoax. Wow. I don't know if he has $1 billion, but someone's got to pay that. That's interesting. Wow.
It certainly sounds like fly hawks fly.
Yep, it's very much in line with expectations. The Fed is very focused on bringing inflation back down to target. And I would take it one step further. It's not just a matter of tightening as the labor market slows down. It is a matter of tightening precisely to slow the labor market down. They need to keep going till they break the labor market, because that's what it's going to take to bring wage inflation down. And that's what it's going to take to bring services inflation back under control, because of course services are very labor intensive.
I'm going to ask Rick Santelli to answer this question, and then Aditya, I'll come back to you and maybe get Steve to chime in as well. There obviously is concern about a hot labor market and wage price inflation, a wage price cycle. Is that the principal cause? As you hear.
Okay, so obviously the Fed minutes at that point were pretty hawkish, but it's not that hawkish because we kind of knew what they were saying in the first place. But still not the best. Yeah, I don't know if Alex Jones is going back. I wonder if you can't pay the money, do they like put you in jail for that? Like what exactly Or does he have the money, which is why they were able to charge? Basically, they're taking everything from him. If you can't get the billion, you're going to get at least whatever money he's got. Alex Jones had a very successful media company, by the way, InfoWars. I used to watch it in high school. The reason I say that without cringing or anything is because YouTube recommended it to me, so I just clicked on it. And my first thoughts were like, this guy's kind of wild. But it was kind of interesting because he was kind of wild. So it kind of got me hooked listening to some of his stuff. But obviously it was kind of ridiculous, a lot of the stuff he was saying. So nonetheless, InfoWars was a very successful media company. It just was a media company propagandizing a lot of nonsense. Kind of like what Vice put out yesterday about Elon Musk. They said that he talked to Russia before he tweeted. He talked to Putin before he tweeted his like peace plan. And Elon unequivocally denied it. So, when you're chasing clicks, when you're saying Sandy Hook is a hoax, when you're doing stuff like that, I don't know. It's probably going to lead to not great outcomes. Palantir, $8.08, up 0.44%. Spotify, $8.92, up 1%. I put out a thread on Spotify that you guys can see on my Twitter. Talked a little bit about some of the controversies that's going on in their podcasting business. Pinterest at 23, DNA at 285, Google at 98. Red day for the market, but not as red as we thought it was going to be. I mean, ARK at 36. It's not even at the 52-week lows yet. Oh, it hit a new 52-week low today. Oh, it hit 34. 35 used to be the previous low. Well, there we are now. Basically, if he doesn't have $1 billion, he will work for the rest of his life to pay off that. He can save 100%. He's just okay. That's a little extreme, but yeah, there's always a workaround. He'll never pay. I wonder. It's going to be interesting to see what happens. You think Gabe is going to be right? I don't know, man. Gabe is very bearish on the market. I think that in the short term, he might be right. I don't know if we fall beneath 3,000 on the S&P or something. And like, that's how he would make a lot of money, right? If the S&P falls really bad. But I don't know. I have no clue. I think he has an argument. I don't know if he's correct necessarily. Alex Jones got a lot wrong, but some of the things too, he got right. Epstein. Yep, that is true. The guy did have some things that were right. The guy did have a lot of things that were wrong. Kathy is running out of 5. Okay, Nev 2022. This is the best comment I've seen so far. Kathy is running out of 5 years. Yeah, she can't keep saying 5 years, man. But by the way, I did look at a chart yesterday. Man, I don't know if I saved it, but it was Kathy versus Berkshire. They're both returning exactly the same over the past 5 years. So regardless of what you think, I mean, Berkshire with Pepsi and with Wells Fargo and with Apple and with Coca-Cola and Kraft Heinz, they're only returning like 9.2% and Kathy's doing 9.1%. It's almost the same. So even though ARK had a different way of getting to, I mean, ARK just like if you ran it up a little bit and sold at the top, it was amazing. But, they went from 33 to 159, then all the way down to 33. Most people bought around 150, 140-ish range. A lot of people loaded up around 120, 130. But it's still the same 5-year return as Berkshire Hathaway. Amit, can you please ask Chris for his CPI prediction? His August CPI prediction helped me a lot. Yeah, if he ends up in the chat, I'll ask him. If not, we were supposed to do a podcast anyway soon. We'll see. The 5 years is always 5 years out. If you're looking at 5 years at all times, the 5 years is always in the future, and you'll never reach the 5 years. Yeah, it's like about chasing your dreams. You're like, oh, I'll do it next year. Well, next year becomes next year, becomes next year, becomes next year, and then you don't do it. Apple at 138, Roku at 53, Zoom 75, Open Door comfortably below $3 at this point. This one is a mess. This is when I'm thankful I never put a fucking dollar into Open Door. I was like, you know what? It sounded kind of weird. Didn't understand them. Just didn't want to invest. Even though there's a big bull community for Open Door, and I'm not saying anything bad about them, but I don't know. There's something to buying high and selling low that's not the best. Yeah, where's the snow breakdown? Yeah, we just haven't had time to do it yet. But Chris is very bullish on snow. We need to do it. Bought some Meta and Goog today. Interesting. I have not initiated Meta yet. I have not. Because, well, I still don't trust it yet. All right, we are 30 seconds away from the market close. For those who are new to this channel, we ring the bell at market close. For those who are OGs of this channel, first of all, I love you guys for being here. Thank you for being here. I hope you're ready for another day on October 12th. We're already 12 days into October. We only have, what's 31 minus 12? 19 days left. You see how good I am in math, bro? I just did that on the fucking spot. 19 days. 19 plus 12 is 31. Yep, I'm an OG. 19 days left till October. Thank you all for being here. 4 p.m., October 12th, 2022. The stock market in the United States of America is closed. The stock market is now closed. Tesla 217, S&P 356, Uber 25, Baba 75. It was 77 in the morning. Meta 127. 52-week lows were 126.25. Again, trading at a price of sales of 3, trading less than 10 times free cash flow. Obviously insane, but it may have some more pain to go. 508 on SoFi, Enphase 248. SCHD, the Schwab US Dividend Equity ETF. I need to start a position in this because I don't have any dividend income, and I should probably get some dividend income. Just a little bit on the side, a couple bucks a month. That would pay for some coffee, right? Even though it's taxed, so it probably wouldn't. But this is at 67.14. It's barely down on the day, 0.12%. What else we got? Roku 53, Airbnb 112. Yeah, I mean, pretty boring from the market close. Nothing crazy. Nothing even from the market open. Dude, what about Rocket Labs? Okay, I know I said I was going to look into this company. I cannot even explain how busy I've been. The fact that I've not had the time to look into them. Look, it's a $4 stock. Kathy's buying it. I get that they're like the smaller version of SpaceX, basically, which is why people are excited. I just need to do the research, man. Like it takes me a while to get convicted on stock and buy it because I made the mistake of buying without conviction. Like Rocket Lab, that sounds cool. I'm going to buy 1,000 shares. And then when it goes down, I have zero conviction. Like, so I really need to learn about it before I buy it. Did Palantir increase their sales team? Most likely. Now the governmental deals is probably not a result of sales teams, a result of like relationships they have. But eventually they had 25 last year. I think they have 41 in Q2. They're probably at like 60, 70. I would imagine at least. Joel, what's up? Richard. Palantir maintaining around $8, looking more like a hedge against the market, growth hedge. Yeah, I mean, Gabe has made that point that Palantir is probably going to perform inverse to the market when the market goes down if there's this geopolitical crisis stuff, because at the end of the day, Palantir would benefit off of that theoretically. Obviously, no one wants that to happen, and we want just a normal market, but we would have to see how this stuff kind of plays out. Doom Shalat in the chat, Palantir to the moon. I agree. I've had Meta for a while, trying to get my average under 250. Yeah, I sold at 250 when I bought at 300. I was like, screw this. I'm just going to move on, even though whatever I bought went down. So it's not like I made some phenomenal decision there, but I did save myself from losing less under Palantir or Meta. All right. Let's go to CNBC, see what they are talking about. Did anyone else buy anything today? Let me know in the chat if you bought anything else today. And let's talk about anything that you bought. All right, Mohammed El Hiran. Mohammed El Iran. I might be saying that wrong, but he's talking about the Fed September minutes. This is a guy you want to listen to. He's one of the best contributors. He's not perma bull, perma bear. I think he just keeps it real. So let's take a look at what he has to say about the Fed's minutes.
The headlines, Mohammed. I think the biggest is that they weighed the cost of doing too little or too much and decided it would be riskier to do too little to fight inflation than to overdo it.
That's absolutely right, Sarah. These minutes are as expected to somewhat, I don't want to overdo it, somewhat more hawkish. What the minutes do well is balance the inflation battle with the growth and job challenge. What they don't do well, and what the Bank of England has reminded us we have to keep an eye on, is bring in the financial stability challenge. And that's what's missing in these minutes. There's a passing reference to liquidity in the treasury market, but that's about it.
But keep in mind, and our viewers should keep in mind as well, these are the minutes from the last Fed meeting, which was, you remember, it was a very hawkish Fed meeting. The market tanked afterwards. It fell 5% that week. on this idea that they're not going to be slowing down anytime soon. And things really started to get a little more disjointed after that, Mohammed. So how problematic is what you're seeing in the markets at this point?
Look, it basically points to the fact that the Fed is so late that it will probably break something on the way to reducing inflation. The most likely victim is economic growth. I think the marketplace is starting to recognize that the risk of recession and what that does to earnings is an issue. So think of interest rate risk we've understood, credit risk we've understood. There's a third element that we haven't really priced in at all, which is liquidity risk and market functioning risk. And that is something that I hope we're not going to have to price in. But if the UK is telling us anything, is markets are quite fragile after such a long period of zero interest rates and massive liquidity.
And the other thing that we're starting to pick up, Mohammed, is that the interventions are not proving that successful. It looked like they were at first with Bank of England, Bank of Japan, but both the bonds and the currencies and those markets are back to pre-intervention levels. So what's it going to take here?
It's going to take a change in the basic economic measures. So in the case of Japan, at some point they have to exit YCC, yield curve control. Until they do that, they're going to find it very hard to control that currency depreciation. And when they exit, that in itself is going to be a challenge. For the UK, it's very different. For the UK, there's a short-term challenge of stabilizing the pension system. That's a Bank of England issue. But then there's the underlying problem of a government thinking it has more fiscal space than it does. And I don't see a way out unless the government does a U-turn on its tax cuts promises. And that's going to be hard to do. But that's the only way out of the mess the UK is in right now.
The other thing people are worried about is the US dollar, which is stronger again right now, just this relentless march higher. I was curious to get your reaction, Mohammed, to Janet Yellen's comments, the Treasury Secretary. I asked her yesterday if she was okay with it and whether she would consider joining other central banks that are trying to intervene to stop the dollar strength. Just listen to what she said on that.
Well, I've said on many occasions that I think a market-determined value for the dollar is in America's interest, and I continue to feel that way. And I do think that the pressures we're seeing largely reflect fundamentals and policies that are, by and large, appropriate.
She blessed it. I mean, she basically said that it makes sense and we want a market value. So is the market going to keep daring her and others to do more? Should you just buy the dollar?
Well, there's three things pushing the dollar, which is a favorable interest rate differential. That is going to exhaust itself. A favorable growth differential, that's going to stay for a while. And of course, our safe haven status. So I warn people, don't bet against the dollar too early. I've been saying this, as you know, Sarah, for the last 3 years. The time will come, but it's not just now. But what the US authorities are going to get an earful of is all the central bankers and government officials coming from other countries to Washington, D.C. this week for the IMF annual meetings. And they will complain about the Fed, they will complain about the dollar, and they will basically say, you are forcing us to tighten too much. And the global outcome is financial conditions that will end up being much tighter than what's needed for fundamental reasons.
Welcome back. It's time for three.
Mohammed keeping it pretty real. Not super bearish, not super bullish, just making an argument around how we should conceptualize what the Fed is doing. And obviously he mentioned that interest rates were rough, or interest rates are bad right now and rough because the Fed just got inflation wrong. And it's so crazy, man. I know we blame the Fed and everything, but if any of us were in the Fed in that moment in 2021, like, would we have made the decision to raise interest rates at that time when we were coming out of a pandemic and we still needed businesses to open back up? I mean, it's a hard decision to do that at that time, especially when you think the economy is trash and you need constant stimulus. I do think, though, when a picture of a monkey was selling for 1.2 million, the Fed probably should have been like, maybe there's too much money in the system. Maybe. But maybe, I don't know. And that's why I think people are mad that the Fed ultimately got it wrong. Yeah, I'm just buying like 50 a day in case we don't plummet. I think we could see a bottom if the Fed pivots and CPI looks good, but that PPI wasn't good, so I'm scared for CPI. Yeah, I don't think CPI is going to look good, man. But then again, last time I thought CPI was going to look great. I was like, oh, we're going to go down. We're going to go down from 8.5 to 7.9. We went to 8.3, and we went up in core inflation. So it's a tricky thing, man. It's weird. I kind of like having some cash right now because just being in this market is scary. Like, it's just scary putting money into something and just seeing it plummet, and you don't know when it's going to come back, especially if the S&P has another 30% to fall. It takes time. Like, again, DCAing, correct strategy, but also you don't want to just blindly DCA into companies just because you like them, right? Like, there is a smarter time to pull the trigger on more of your stuff. For example, my mom bought some Tesla at 290, even though that was down from its highs of like 315 or whatever. That was and she didn't tell me she did. Usually she tells me. She didn't tell me she did that. If she had told me she was doing that, I would have been like, no, don't buy it at 290 because like 290 was ridiculous. I was like, it was crazy. It's like, no, the whole market is down. Tesla's somehow remaining up. It's not going to continue forever. 290 is a horrible price right now. So even if you believe in Tesla for the long term, if you could get it at 213 versus 290 and use common sense to be like, it probably shouldn't be 290, then you don't buy it at 290, which is what's going on with Meta right now for me, right? Like, Meta is stupid at 127. It's at a 5-year low, or 122 is the 5-year low. But it's also like, if those next earnings come out and their DAUs and MAUs go down even by a little, the market's not going to care, man. The market is not going to care. When do you buy then? I think you wait for a little bit more of a decline, right? When you're feeling ready for it. For example, like Google getting to 89, 88, that's when I'm like, yeah, it's more exciting to me, right? You never know. Tesla at 290 was still cheap as fuck. That is incorrect. It was in relationship to the market. Tesla was way more exacerbated. Like, the S&P was at 370. And Tesla, like last time Tesla was at 290, the S&P was at 430, or in that range, right? That $700, $800 range. Or like, yeah, 850, whatever. So it just didn't make sense at the time. It didn't make sense. Yeah, but on the contrary, if the earnings come out good and they're good, you missed out. Goes both ways, I feel. I don't know if you miss out. Even if earnings are good, I think the market is like, okay, awesome. And then we go right back down, which is a little bit of an up and down rally we've had for the past like 7 months. Like, yeah, let's say like Google did 70 billion last quarter, and I think the market sent it up to 115 right before the split, and now it's down to 90. Like, earnings being good doesn't get, because first of all, every tech company's earnings have to be good, not just Facebook. And macroeconomically, if Apple does bad, the S&P falls, which means even if Facebook does good, Facebook doesn't survive the S&P falling. So there's a lot of issues with just earnings being good, and there's not enough of a pop. It's not going to go from 130 to 150 just because they didn't lose any users. They're definitely not gaining billions of users. Facebook's done growing users. They have to now show retention, and their core products are keeping people inside the platform. And it's a difficult thing. It's a hard thing to keep 3.4 billion people using it every day. It's just hard. It's just hard. I think these earnings are different with CPI decreasing and slightly more dovish Fed. But I don't know where the Fed is dovish. The Fed is going to do 75 bips in November. If CPI decreases dramatically, maybe they don't, but I guess we will see. Are these 1-year graphs you show on Webull charts? Yeah. So the one I'm looking at right now, this is the 1 year. So we had 384. We had September 24th. September 2021. This was the high at 384. And now we are at some of the lows at 162, 154-ish. And again, Palantir at 805 ending out the day. All right. I think that's pretty much it. I do agree. I'm still scared though. Yeah. Again, it's not something to be super scared about, just something to be cautious about. All right, everybody. I'm ending off the stream. Thank you so much for being here. Shout out to the 2 users who just joined Audia. Link in the description. I get a notification every time someone joins Audia. It's really cool. So if you want to join and check out my startup, check it out in the description. We're updating it, redesigning it, a lot of new stuff to come. So looking forward to getting any feedback and any of you checking it out. It's basically trying to build a financial, or not a YouTube of audio that's focused on the finance space for now. I'm doing a podcast with Tom Nash starting in like 5 minutes on the Can You Learn to Speak My Guy channel. So if you want to forget a little bit of the market and talk about some fun stuff and just have us in your ears talking about some fun, I'll put the channel in the description right now. Not in the description, in the chat. And you can follow along with us for whatever we talk about. We don't know what we're going to talk about, but we'll talk about something. Is it free to join? Yes. Aldia is totally free to join. Also, Farzad, shout out to him, man. He gave us a shout out today. I joined his stream, and I didn't know he was going to do that. He gave us a shout out. So it was Farzad is a big Tesla creator who's on the platform now exclusively. He's not on any of the other audio platforms because he really likes the idea. Like he's I don't know if you guys know him, Farzad Mesabani. He's a very up and coming big Tesla. I think this guy's gonna have 100K very soon. Just building such a great community. And shout out to everyone who's come to the market close. I appreciate everyone who's in my community. So awesome stuff. Thank you all for being here. I appreciate it. We're going to continue the podcast or the conversation. Can you learn to speak, my guy? And we'll see what we talk about. But yes, it's free to join. You can sign up. What is the name of that Tesla guy? Type in Farzad Tesla and he'll pop up. Comment on one of his videos. Let him know that Amit sent me here to subscribe. All right, everybody. I'll see you on the other channel. Bye-bye.